Welcome to episode 3 of my core basics curriculum. In this episode, I'm going to be showing you the different ways that price or stock chart or forex chart or whatever you want to call it can move. There's 3 different ways. As you see here on the screen, there's uptrend, downtrend, and there's consolidations. First, let's go over uptrend. With the uptrend, it's in the name, price is going up, obviously. And how you can determine that price is going up, as we see here with this uptrend, is you see how price is going up. And what do I mean by how? You see how price is creating higher lows, and is continually breaking highs, creating higher highs. That's what I mean by an uptrend. So it's making higher lows, and higher highs. See that? Higher lows and higher highs. Makes sense? Okay. So that's how you determine an uptrend. When price is continuously breaking highs, but is not breaking any lows. So these would be like spot out lows. These are spot out highs, because you can obviously see it within the candles. Because if we look here, if we delete all that, you can still look and see that those are spot out lows and highs. Now, what is a consolidation? A consolidation would be something like this, where price is just moving sideways. It's still moving up and down, but it's in a range or a zone or an area. That's what I mean by consolidation. So as you see here with this area right here, you see how price is moving up and down but isn't really drastically or energetically going anywhere. It's just staying in this little box here. So let me draw a little box so you can see this easier. You see how it's just in this range, just sitting here? Let me do my price imbalance or consolidation. This is just price consolidating in this range right here. That's all it's doing. It's not doing anything else, just going up and down, up and down. It's breaking internal lows and internal highs. And don't worry, don't confuse yourself and ask what those are, because for the ones that already know what those are, if you know, you know. But if you don't confuse yourself. You will learn it later in the future. But a consolidation is when price can be breaking highs and lows. It can be doing that, but it can do it in a range. Over time, when it comes to like looking at the charts and just overall screen time, you'll very easily see uptrends, downtrends, and consolidations. It's just screen time over time. If you back test this, you will see it like it's nothing. Got it? See, now with downtrend, price is going to be making lower lows and lower highs. So this would right here would be a downtrend. And what I mean by lower highs is this high is lower than this high. This high is lower than a previous high. And this high right here is lower than the previous high. And this high is lower than the previous high. And this one is lower than the previous high. And then this is where the consolidation comes in. And then once it breaks that last high, or that swing high, you can see a change in structure or in price structure. This is what they would call structure. So, or price structure. Uptrend is a bullish structure. A downtrend is a bearish structure, because bullish is up and bearish is down, like I taught you in the first episode. And then sideways is just consolidation. It's like neutral, I guess you can say. You can call it neutral, consolidation, or sideways. So let's move this right here. So if you want to look back again, what is this? We just went over this. What is this? When price is making lower highs and lower lows. Lower low, lower low, lower low. What would this be? This here. What would this be considered? This would be considered a downtrend. Correct. If you said downtrend, you got it correct. Now, right here, what would this be? This little area right here. What would this area be? This singular area. Price isn't going anywhere. It's simply moving up and down, up and down, up and down. In a what? In a range. And what would this be called? This would be called, finish it. This would be called a consolidation range, or a sideways range, or a neutral range, or a fight between the bulls and the bears. Whatever you want to call it that's equal to neutral or consolidation, or both ways, this is what this means. This is a consolidation, because when it comes to consolidation, it can break lows and highs. It can do that while it's consolidating. So if we mark these lows and highs here, a normal consolidation, you want to see price not break any lows or highs. And as you see, price does that for a little while. You see how we create lows and highs, but it doesn't break any? It doesn't break any lows and highs of the range. It just continues making them. It may break the lows and highs internally within the range. So these will be, like these lows here would be within the range, because if we draw here, this is the entire range right here. This is the entire consolidation range there. So this is the actual range here. So it's not breaking anything, or it's not explosively going up or down, but it's simply going up and down, and it's ranging, not breaking any highs. And as you see, when it breaks out of it, it changes structure. It changes into a what? A bullish structure and or an uptrend. So once it starts disrespecting the range, you can see some sort of change in structure. But you will learn to precisely predict that in the next mentorship. This is just simply teaching you the basics. Okay? So there's two types of consolidations. It's not just sideways. Remember that. It's not just sideways. Price can consolidate while going down also. I know that may sound stupid, but it can consolidate while going down and or up. Let me show you what I mean by that. Let's delete these lines just to make the chart a little clearer for your eyes, because I do not want to make it so complicated for you. So here's an example of price consolidating while being in an uptrend, I guess you can say. But as you see here, right, it's based off the lows and highs, right? If we mark out highs, it's continuously breaking highs. High broken, and high broken, right? So we're in a bullish structure. But if we look at the lows, higher low, higher low, higher low, higher low, higher low, and another higher low, which I don't have to mark because you see it there. But as you see here, price is consolidating. What I mean by consolidating is it's in a range, but it can be in a range in either direction, up or down. And consolidating, what that means is price isn't really moving at all. It has little to no volume, but it's still going somewhere, but it's not going anywhere as fast as it will normally move. As you see here, it's going up. Obviously, as we can see the structure here, there's higher lows and there's higher highs. So we're in a bullish structure, but we're ranging. We're in a consolidation range. And as you see here, we finally break out of the range around here, and we still consolidate after that. We break out of this consolidation range, then we start consolidating again, and then we finally start trending up again. We finally start trending up after these two consolidations here. So this will be a normal consolidation, a normal sideways consolidation, and this right here would be a bullish consolidation, I guess you could say, or an uptrend consolidation, I guess. But you can call this a bullish consolidation, or a bullish ranging area, whatever you want to call it. It's the same exact thing. You can come up with your own name and call it a bullish consolidating area, but it's literally the same thing. It's just a bullish structural consolidation. This is what this is. Okay? So now if I can find an example of price, oh, I already found one right there. As you see here, with this example, price is consolidating while going down. See that? How there's little to no volume, but it's still moving downwards. As we can see, we can check the structure and see. So, lower lows, lower lows, lower lows. See that? It's continuously breaking lows, creating lower lows. And if we look at the highs, it's creating lower highs, lower highs, lower highs, and lower highs. So the lows are continuously being broken, telling us that price is consolidating down. And we can eyeball it too. If we delete all the drawings, we can eyeball it. So this would be your example of a bearish consolidation range. This is price consolidating or moving lower while consolidating. Correct? So if we mark those points out again, it's creating lower lows, or consecutively or consistently breaking lows while consistently making lower highs, lower highs, lower highs. So this would be a bearish consolidation, or a bearish structural consolidation, whatever you want to call it, because they're all the same thing. It's just different words. But this episode should have gave you an entire rundown, or a good and basic understanding of certain trends when it comes to price action. So I'm going to end this video here. I don't want to take up too much of your time. I'm trying to keep these videos as short as possible, short and sweet, as much information as possible so you can process it clearly. But enough of me talking. I'm actually going to end the video now. See you guys later. Bye bye.